What if I told you that the most powerful institution in the world is not a government, a corporation, or a religion, but a bank? A bank that controls the money supply, the interest rates, and the economy of the United States and the world. A bank that operates in secrecy, with no accountability, no oversight, and no regulation. A bank that has the power to create or destroy nations, wars, and crises. Welcome to the world of the Federal Reserve and interest rates. In this video, we will explore some of the most controversial and conspiratorial aspects of the Federal Reserve System, or the Fed for short. We will also examine how the Fed manipulates interest rates, and what impact it has on the global economy and society. But before we dive into the details, let's first define what the Fed is. The Fed is the central bank of the United States, which means that it is responsible for managing the nation's money and banking system. The Fed has four main functions: conducting monetary policy, regulating banks, maintaining financial stability, and providing banking services. But who owns and controls the Fed? And what are its goals? The Fed has a complex structure that consists of three parts: the Board of Governors, the Federal Reserve Banks, and the Federal Open Market Committee. The Board of Governors is composed of 7 members who are appointed by the President and confirmed by the Senate for 14-year terms. The Board of Governors sets the general direction and policies of the Fed. The Federal Reserve Banks are 12 regional banks that are owned by private banks in their districts. The Federal Reserve Banks implement the policies of the Fed and provide banking services to their members and the government. The Federal Open Market Committee is composed of 12 members, who are the Board of Governors plus 5 presidents of the Federal Reserve Banks. The Federal Open Market Committee decides on the monetary policy of the Fed, which means that it controls how much money is in circulation and what interest rates are charged. The Fed claims that its purpose is to promote a stable and prosperous economy for the benefit of all Americans. It also claims that it is independent from political influence and interference, and that it operates with transparency and accountability. It says that its decisions are based on data, analysis, and expertise. However, not everyone believes these claims. Many people suspect that the Fed has a hidden agenda that goes beyond its stated goals. Some people believe that the Fed is a private cartel that serves the interests of its owners and allies, who are the elite bankers and corporations of Wall Street. Some people believe that the Fed is a tool of a global conspiracy that seeks to create a one-world government and currency under their control. Some people believe that the Fed is responsible for creating or exacerbating major events, such as the Great Depression, the 2008 financial crisis, or the COVID-19 pandemic. Are these accusations true? Or are they just paranoid delusions? The truth is hard to find out, because the Fed is very secretive about its operations and decisions. It does not reveal who owns or profits from it. It does not allow any audits or investigations of its books or activities. It does not answer any questions or criticisms from Congress or the public. It only says that it is a public service institution that has nothing to hide. But if it has nothing to hide, why does it hide so much? This is one of the mysteries that surrounds the Fed and fuels the curiosity and suspicion of many people. Next, we will look at how the Fed manipulates interest rates, and what impact it has on the global economy and society. Interest rates are the prices that borrowers pay to lenders for using their money. Interest rates affect how much money is available in the economy, how much people save or spend, how much businesses invest or produce, and how much governments borrow or tax. The Fed controls interest rates by using 3 main tools: open market operations, reserve requirements, and discount rate. Open market operations are when the Fed buys or sells government securities such as bonds or bills in the open market. When the Fed buys securities, it increases the money supply and lowers interest rates. When the Fed sells securities, it decreases the money supply and raises interest rates. Reserve requirements are when the Fed sets the minimum amount of money that banks must hold as reserves against their deposits. When the Fed lowers reserve requirements, it allows banks to lend more money and lowers interest rates. When the Fed raises reserve requirements, it forces banks to lend less money and raises interest rates. Discount rate is when the Fed sets the interest rate that it charges banks for borrowing money from it. When the Fed lowers discount rate, it encourages banks to borrow more money from it and lowers interest rates. When the Fed raises discount rate, it discourages banks to borrow less money from it and raises interest rates. The Fed claims that its monetary policy is aimed at achieving two main objectives: maximum employment and stable prices. It also claims that its monetary policy is flexible and responsive to changing economic conditions and expectations. It says that its monetary policy is based on the best available information and models. However, not everyone agrees with these claims. Many people argue that the Fed's monetary policy is flawed and harmful to the economy and society. Some people argue that the Fed's monetary policy is too loose and inflationary, which means that it creates too much money and lowers interest rates too much. This leads to bubbles, crashes, debt, and devaluation of the dollar. Some people argue that the Fed's monetary policy is too tight and deflationary, which means that it creates too little money and raises interest rates too much. This leads to recessions, unemployment, defaults, and depression. Some people argue that the Fed's monetary policy is unpredictable and arbitrary, which means that it changes its policies and targets without any clear or consistent rules or criteria. This leads to uncertainty, volatility, speculation, and manipulation. So, are these arguments valid? Or are they just biased opinions? The truth is hard to determine, because the Fed's monetary policy is complex and controversial, and has different effects on different sectors and groups of the economy and society. It is difficult to measure and evaluate the costs and benefits of the Fed's monetary policy, and to compare them with alternative policies or scenarios. It is also difficult to isolate the influence of the Fed's monetary policy from other factors that affect the economy and society, such as fiscal policy, trade policy, technology, or culture. But what is clear is that the Fed's monetary policy has a significant impact on the global economy and society, and that not everyone benefits or suffers equally from it. This is one of the realities that confronts the Fed and challenges its legitimacy and authority. These are some of the most controversial and conspiratorial aspects of the Federal Reserve System and interest rates. There are many more, such as the origin, history, and legality of the Fed, the role and influence of the Fed in international affairs, or the future and alternatives of the Fed. Some of these aspects may have some truth or merit to them, while others may be completely false or absurd. But they all reflect a common concern and distrust of the Fed and its power over the economy and society. The Fed is a fascinating subject for research and debate. It reveals a hidden side of history that is often overlooked or ignored by mainstream sources. It also challenges us to question our assumptions and beliefs about how the world works. But we should also be careful not to fall into paranoia or fantasy when dealing with the Fed. We should always seek evidence and logic before accepting any claims or theories about it. With that said, thanks for watching, and until next time at Wealth Discovery Channel.